numbers, and he told us that our inflation climbed to about 31%, with food inflation close to 40%, precisely 37%. Where are we going with all of this? So let me speak the one people who understand, because sometimes it will be as if all these numbers I'm saying and all these things, jargon, it doesn't make sense. But all these numbers and all this stuff that you get to hear me say on this program is about you and I. It's about how it will affect your life, your well-being, your pocket, my pocket. So it's very important. In a while, I will be speaking with my guest, and we'll try as much as possible to dissect the issue. Next week is the Monetary Policy Committee meeting of the Central Bank of Nigeria. What are the options and the choices for Yemi Cardoso and his team? Will they increase monetary policy rate again, even though that the central bank has said that its target is inflation targeting this year? Now, inflation targeting would also have its own challenges and meets a lot of structural issues. But let me also hold my fire, and let's quickly give you what's in the news today. The federal government is in talks with the World Bank to complete the process of securing about $1 billion loans to tackle challenges faced by internally displaced persons and their host communities, as well as boost rural access and agricultural marketing in the country. The Central Bank of Nigeria has 2.16 trillion naira in unpaid funds from the intervention program, which were sourced from the cash reserve ratio of deposit money banks. This is according to the CBN Development Finance report. Still with the Apex Bank, it has said that 11 electricity distribution companies secured a credit facility amounting to 273.34 billion naira to purchase 414,000 meters for distribution. The loan aims to increase electricity capacity from 3,400 megawatts to 4,900 megawatts. Still with the Central Bank of Nigeria, it has reduced the exchange rate for computing custom duties at the nation's seaports and airports for the second time in 7 days. The customs exchange rate was slashed from 1,617 naira 96 kobo to $1 to 1,593 naira 41 kobo to $1. The Ministry of Industry, Trade and Investment, in partnership with the Development Center Lab 4, has signed a memorandum of understanding for the channeling of 50,000 jobs to Nigeria in the next 3 years. The national coordinator of the National Talent Export Program, Dr. Femi Adelui, said the program is a key initiative that will position Nigeria as a leading global hub for service exports. The newly elected executives of the Federal Capital Territory chapter of the National Association of Nigerian Traders have been inaugurated with a pledge to foster peace and tranquility within markets to drive economic growth and development. Our correspondent, Nomo Meje, brings us further details.
The members of the Federal Capital Territory chapter of the National Association of Nigerian Traders, NANT, has inaugurated their newly elected executives while signing a memorandum of understanding on how to reduce multiple taxation in the country. The event was graced by some members and non-members of the association. The new chairman of the association, Ifeanyi Okonkwo, revealed plans towards building allocations for an international market to boost trading activities.
By establishing a code of ethics and promoting professional conduct, the organized body contributes to the cultivation of a reputable and trustworthy trading community. This in turn can enhance the image of the industry as a whole.
Management system to stop the issue of multiple taxation, we come up with the digital identity to give to all the informal sector of the economy, both traders, both artisans, both transporters, all over the place. So we are capturing, right now we have started enumeration. We are capturing all our people across all the local governments, or house to house, market to market. We now bring them to Tasnet. When we bring these people to Tasnet, so now with that, government have agreed with us to work with our platform. That is why we have partnership with the Joint Task Board and Federal Inland Revenue Service.
A lot. We are going to make a lot. Because now, in the new dispensation, we try to make ourselves known and seek for the support of the new government, how they can assist traders. Like the International Women's Day that just finished, they say inclusion, so that government can assist women, especially the traders, in order to help them, because everything is very costly now. So we need assistance from the government, so that when they give us any assistance, we reflect in what we are selling to the society, at least.
There is a need for more inclusion of women and youth to contribute to the nation's economy. Norma Omeje for Moneyline with Nancy.
All right, that's it for the news. Let's quickly take a break, shall we? When we return from the break, I'll be giving you some analysis on the latest inflation numbers that was released by the statistical agency, National Bureau of Statistics, 31% inflation. I'll be doing the chart breakdown for you when we come back from this break. Don't forget to connect with us on all our social media platforms. That's it on the screen, so you can connect with anyone you like or all. If you are not connected to us, please do that right now. You can like us on Facebook and follow. To the WhatsApp number there, you can send us a message or your comments, not call, send us your message. On Instagram, you can follow us. You can also, on Threads, you can follow us there. On LinkedIn, you can follow us on that handle. On X, you can also follow us on, what's the other one? Is that TikTok? So many symbols. Then on YouTube, you can also subscribe to our YouTube channel. If you're not subscribed to it, you are really missing. Why? Because you get to see great interviews where you get a lot of insight about your well-being, your financial well-being now, and the economy. Because if you understand the way the economy works, you will be in a better position to be able to, go about stuff in a better way. You'll be able to handle your finances well. You'll be able to have that forecast and prediction, and to even handle your money well. And that is why this program comes to you every weekday on this channel. So let's quickly take a break. We'll be right back. All right, welcome back to the program. Can we take some analysis of the inflation numbers as released by the MBS? Shall we, guys? I'm waiting for you. The headline inflation, 31.7%. 31.7% year on year, and month on month is going for 3.12%. So what that means is that from January to February, of course, the difference 3.12% from 2.64% in January of 2024. So this is the monthly inflation, and don't forget that this is February's inflation numbers. We are in March, and why is this important? This is important because this is important figure right now, because we normally see the inflation numbers like a week before the MPC meets, as it were, but on the months that the MPC doesn't meet, the MBS still releases those inflation numbers. So 31.70% headline inflation from 21.91% in February 2023. So where we were in February 2023 was at 21.91%, almost 10% higher, so almost 10% higher from last year. Now let's go to the next page, shall we, guys, and see what's there. So that's the graph there. On a year-on-year basis, 33.66%, talking about urban inflation for those of us that live in the urban centers. Of course, urban inflation, 3.66% from 22.78% last year. So you can also see it here. There's a trend that I'm looking at now, almost a 10% increase from where we were last year. Month on month, 3.17%. And I think for the last one was 3.16%, if I'm not mistaken. Okay, let's move over to the rural inflation and see what the rural inflation is looking like. Rural inflation, of course, is lower, and that could also be understandable because Nigeria's inflation is also influenced by what happens in the food system, talking about the value chain, production, transportation, and everything concerning logistics. And food is actually being produced also in the rural areas. So that is also having an impact. And we're seeing rural inflation at about 29.9%, still lower than urban inflation. And if you can see month on month, it's still a bit lower, 3.07% and 3.1% urban inflation. But if you check out where we were in the month of January, we were at 2.5%. And as at February, we are at 3.07%. What else, guys? I hope you all are understanding what I'm saying, breaking down these numbers. And these numbers really reflects what is really happening across the country. For year on year, food sub-index, this is where the cocoa is, the matter. The crux of the matter is this number. And it's close to 40%. And I'm really surprised as of now, we're in March, and we've had that astronomical climb, as it were, of inflation in the last few months. And we all know that it's also triggered by food inflation. What is the federal government doing concerning the supply of food? At one of the town halls that we had, AIT.live town hall, that was some weeks ago, where the Minister of State for Agriculture came. He did tell us there that grains were going to be released from the reserves. Quite a whole lot is going on. Of course, the new season farming and all of that, that wheat has been cultivated. We expect that to also get on board. But this food inflation is so stubborn and is close to 40%. Check out where we were last year, 24.35%. This is more than a 10% rise, actually. What is it there? 13%? 13%. For all of us, we know that when you go to the market now, it's difficult to even buy stuff. You can go in the morning and buy something for 1,000. You go in the evening, it's 1,500 naira. I don't know if our authorities see these things. Now they say, I don't know. 3.79% month on month from 3.21% January 2024. Okay, what else do we have? Let's quickly glance through. so that we can take our guests and we break down these numbers further. Why are we seeing these numbers? The core sub index, let's go. And particular, okay, this is what I really want to see. Yes, highest rise in Kogi, and Kogi is always coming out. You know, the top three, Kogi, 37.9%, Oyo, and I really don't know why Kogi is always coming out, because it's the confluence state, isn't it? But Oyo State at 6.6%, Bauchi at 5.62%. Now, the slowest rise does not mean that there's no inflation here. It just means that inflation is not rising year on year as against, yes, that's the business word, as against these set of states. So Borno 26.26%, Taraba 26.72%, Benue 27.40%. But if you're also taking a look at what this number will also tell you, is that of course in these belts you have food production, as it were, and it also reflects in what we saw concerning rural inflation. All right, I think we can take a break now to bring in my guest for us to talk about inflation, headline inflation at 31%. What does it mean for you and me? Is there an end in sight? We'll be right back.
We can do it. We can build our country for the sake of the millions of the people. Delivery, yes, we must achieve it.
It could seem impossible because you don't dream big. When you have this mentality of an achiever, nothing is impossible.
So don't take on too much commercial or private debt so you can service. Any country, if you can service, if you're generating enough revenue from investing that money, fine. But if you're not, you have to be extremely careful because debt relief is not easy.
Hard decisions have been taken and they are required to help us because the central bank can't do it on its own. It has to work very closely with the fiscal side. One without the other is like, that famous adage of clapping with one hand. It won't go anywhere.
The last thing central banks want is a financial system, the tail of the dog, to start wagging the body of the dog, which is the economy itself. They don't want a feedback loop from bad finance to bad economics.
This is Moneyline with Nancy, and I am Nancy Nnaji, where I consistently give you a dose of finance, economy, markets, as well as investment information. All right, welcome back to the program. My guest is joining me virtually now. He's Mr. Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill, Denham. Hello, Tajuddin, and welcome to the program.
Hello, Nancy. Thank you so much for having me on today.
Yes. Tajuddin, please help me figure this out. The state of inflation we have right now, is it hyperinflation? Is it runaway inflation? Or are we on the way to hyperinflation? Or is high inflation?
Right. Well, I think comfortably, we can call it high inflation.
Comfortably, we can call it what? I did not hear you.
High inflation.
Okay.
So because we have a situation where, we are at 31.7%, and if you look at that number and you trace ago, you will notice that the highest that we have seen in the past 28 years is 47.6%, which is in January 1996. And what that implies is that this 31.7% inflation for the month of February, is the second highest inflation since in the past 28 years. And it is an indication of several factors. And what I can also say is that the drivers of inflation didn't start now. It is a reflection of accumulated impact of several factors over the past sort of, let me say, 8 years. And it is just, biting all of us now because we left it without really addressing it. Yeah.
Okay, I know I asked you that question because for those of you that studied economics or you're an economist, I know that hyperinflation could be defined as perhaps an uncontrollable general price increase over 50%. And you were right on point when you referred me back to in the 90s when we had about 47% inflation. Now, since you've answered that, let me go to the cocoa of the matter, which is in the last 1 year and a half, or in the last 2 years, or let me even say in the last 3 years, have we had hyperinflationary conditions whereby inflation, of course, rising uncontrollably despite the efforts by the authorities to tame it, and is not being tamed? So are we living with hyperinflationary conditions without us suffering hyperinflation?
So we can say that maybe we are living with those conditions, but they are not, largely speaking, reflecting in the numbers, because the number we have in the past sort of 2 to 3 years look more like 20% and below, and also something above 20%. But this time we have a situation where we have crossed 30%, and in looking at food inflation in itself, we are much closer to 40% than we are to 30%. So I would say that this time is the worst, that we are seeing in terms of price movement. And I think, the bulk of this impact, began to reflect in 2023, because we sort of ended, last 2022 with around just above 20% inflation. But we had the impact of inflation expectation. We had, heightened level of insecurity. We also had, lack of adequate storage facilities for, farm produce. A situation also that we had is a case where money supply was, rising significantly. As we speak, inflation is at 31.7%, but money supply, as measured by broad money, has grown by 76% over the same period. So what that tells us is that money supply is rising at more than 2 times the rate at which general price levels are rising. So it speaks to all those factors. And like I said earlier, it did not start today. It is an accumulation of events that were not properly addressed over the past sort of 3 to 5 years. And it just happened that last year we decided to devalue our currency. Last year also we decided to remove completely the subsidy on petroleum products. So those are, largely speaking, the drivers, and it does not look like we are done yet.
What's your outlook for inflation, even as we move towards, of course, as we're in the third month? We are 31.7% now headline. What's your outlook, since you said there is no end in sight yet?
So our estimate is that, we will possibly see around 33-34% inflation by around, April, May. And, that is a reflection of, 2 key factors. Number one is, the exchange rate. We recognize that this year we have also seen a jump in our exchange rates from the close of 907 naira to the dollar last year to around 1,600. So if you look at that margin, it looks like 700 naira additional requirement, for the naira to match up with, $1. So that will have an impact on inflation. And my sense is that with tight monetary policy of the CBN, we most likely will begin to see inflation sort of come down from July. And, that will also be supported by the high base effect of last year. If we had not seen the jump in exchange rate from around 900 level to around 1,600 level currently, my sense is that inflation most likely wouldn't have crossed 30% in the first half of this year. But with that devaluation happening again early this year, it is very, very important, for us to bear in mind that the impact will reflect on the general levels of prices of products and services. It will then be left for the authorities to respond accordingly.
Okay, you earlier said, of course, that money supply has also increased by about 76%. What would you say about the money supply restrictive actions by the Apex Bank that we've seen lately? Of course, Treasury bills right now are going for, perhaps it depends on the period you want to invest, 91-day, 182, and 364, close to over 20%. This is one of the ways that the central bank is trying to mop liquidity out of the system and also make it attractive for people not to chase dollar assets, but of course to utilize the naira. So some of this money supply restrictive actions by the central bank, how do you see it impacting inflation overall? Because it seems as this is happening, money supply is also increasing. Is that moving a needle at all?
So previously, we've not seen, what we have seen is a situation where the central bank, embarked on a tight monetary policy, last year. But, they really were not paying much attention to money supply growth, because you cannot be having a tight monetary policy, taking such decisions, and you still have a case where money supply is rising. It will be, fueling inflation somehow. So this time, what the current, CBN leadership is doing is to, heighten interest rates, to tighten, monetary conditions, and at the same time, they hike the, cash reserve, ratio for the banks, just to ensure that, money supply reduces. And the next thing that should happen is for us to see, stability of the exchange rate. The money supply that I said has risen in the last 12 months by 76% is partly reflective of the impact of currency devaluation. So if you, for domiciliary balances in banks, for instance, you will be converting them at higher exchange rates. That in itself, will have an impact on the deposits, that the banks are keeping in terms of, what, could influence inflation. So that is one thing I believe the central bank is working on. And my sense is that, the moment they maintain a tight monetary policy, what you will see over time is a slower growth rate in money supply. When you have a slower growth rate in money supply, over time, you eventually will see the impact on inflation, because trying to reduce, money supply is a situation where you are trying to address the portion of inflation that is driven by the increase in money supply. I'm not saying that the only driver is money supply. I'm just saying that it is an element in terms of the driver of inflation. We have other elements that are largely speaking, indicative of costs. By cost in this case, I mean the cost of energy, for instance, is having an impact on inflation. But what the CBN can do is to control the level of money in supply in circulation, and they are doing that via the CRR. They are doing that also via hiking interest rates to slow down the rate at which credit flows to the private sector or to the economy generally, particularly credits that are not productive. When you have a productive credit flow, it will engender economic growth. But when it is not productive, such a flow of credit will only drive inflation. And I think the CBN is, taking the right steps in that regard.
Mm. Okay. When you were speaking earlier, you talked about this trend having started like 4 or 5 years ago, that it didn't just start today. And that had to take me back. So I had to do chronicles. I think there's chronicles in the Bible. So I had to chronicle back in the last 4 to 5 years and chronicle it on the path of what has happened in the last 4 to 5 years. 2019, precisely, there was a border closure by the former President Buhari, and it took us about 2 years. I think the border was opened in 2021. 2020, there was a pandemic. 2020, we were also in a recession, as it were. I think we came out last quarter of 2020, which was a bit surprising, the last quarter of 2020. So 2021, we were on the path of recovery. I think second quarter, of course, the GDP growth was a bit stronger. Tajuddin, you're trying to remember those details, but I can chronicle it. Then 2022, was it 2022? We had demonetization. Was it 2022? Yes, before the election. The demonetization process where the Naira redesign. And 2020, that's it, 2020. So was it in 2023, the Supreme Court said, no, there needs to be remonetization, in terms of us using the old notes. And I think the Shonobi-led central bank at that time said, okay, we could do the currencies side by side. In the midst of all of this, we were having a yo-yo exchange rate in the midst of all of this, So how have all these conditions really contributed? And if we take a look at these conditions now, which I've mentioned, we do not have these conditions anymore, apart from the yo-yo exchange rate, which is like a byproduct of some of the other things which I've mentioned. So why is it difficult, to really tame this runaway inflation? We don't have demonetization. The border is not closed. Though some people were mulling against that idea. Was it some weeks ago, earlier this year? Close the border because of this food crisis and all of that.
So I think the area that we should not forget is the area of security. Because the bulk of our issue or our inflation problem is coming from food. And if that is the situation, naturally speaking, what one would expect the government to do is to address those issues around security. There is little or nothing that the central bank can do in that case. It is left to the government that they provide adequate security to farmers, particularly in regions where we have farming activities. Those regions that, let me hit Nigeria, the northern part of the country, and some also western part of the country where many farmers have run out of their farms as we speak, just because they feel insecure. They experience several attacks while on their farmlands. Some of them have to pay to get to their farmland. They have to pay a couple of millions of naira, for bandits to allow them to farm on their land. So when you have such a situation, it means that it calls for an emergency, by the government to intervene and ensure that everywhere is secure. If you look at another element, which is ways and means advances by the central bank to the government, there was a breach of the law of the country on that front that and it led to a situation where the waste and means rose to well over 23 trillion naira. So, and the question to ask is, can we point at any major projects that the government delivered on the back of the ways and means? So that is part of what we call unproductive extension of credit facility. And that is one thing I believe the current leadership of the central bank is really working on to ensure that such a careless lending does not happen again. So there are those, and I believe it is likely speaking sitting with the fiscal authority, and it is something that they have to address. We don't have all those factors that you mentioned earlier, no doubt, but all these factors that I mentioned now, their impacts are still reflecting in our daily lives, even though the public does not seem to have benefited from any of this. But it is biting all of us of inflation. So we need to do more. I mean, the government needs really to do more on that front.
Tajudeen, as a research person at Chapel Hill Denham, I wonder what you and your colleagues, perhaps in the investment space, in the capital market space, and all of that, what you will be telling them to tell their clients about the general economic condition, and if you are indeed optimistic, pessimistic, or you're just a bit in the middle, perhaps sitting on the fence. What are you and your guys? What do you and your guys say? Perhaps as you saw these numbers on Friday.
So one thing that I have to say is that that number, 31.7% inflation, is spot on for us. It is exactly the number that we published, that we expect as a forecast for inflation. And in-house at Chapel Hill Denham, what we are looking at is for inflation to peak at around 33.5% thereabout in the month of April. And the advice that we are giving clients is that they should stay at the short to the mid end of the yield curve. Why are we saying this? We are saying this because of the expectation of further hike in interest rates, expectation of aggressive demand, or let me say aggressive supply of debt by the government. Yesterday, for instance, there was a bond auction where the government raked in well over 475 billion naira. But one thing stood out for us. We saw at the long end of the yield curve, having a yield of 20.4%. And 3-year money printing at 19.9%. So in an inflation environment, you would like to enjoy positive real return. But we're currently in an environment where investors are seeing negative real return, because all the investment securities out there are lower in terms of yield. The Treasury bills yield is lower than inflation. The OMO bill is lower than inflation. 10-year bond yield is lower than inflation. It is negative. So we are advising investors and clients to look at equities where they can enjoy higher returns than inflation.
Of course, the equities market definitely has been on steroids in the last few months, but it will really now be like a potpourri of stocks there within the portfolio. Perhaps the high returning or high dividend paying or capital appreciation stocks, isn't it?
Correct, absolutely. So we are looking at those companies that will find high interest rate environment favorable, because not all of them will be negatively impacted. Banks, for instance, will find high interest rate environment favorable on two fronts. Number one, in terms of loans and advances. Number two, in terms of investment securities. What we have been telling clients is to ensure that they invest in banks that can make the best of high interest rates in terms of yield on assets versus cost of funds, because the area in which it will bite the banks also is the cost of funds to them, or what we can call, cost of deposits. But if you are very efficient as a bank, you will ensure that you generate a lot more on the yield on assets compared to what it will cost you to create those assets in the first instance. So you will enjoy what we call net interest margin that is a lot more compelling and that will be earnings accretive. So I believe equities is where investors should be looking at, with year-to-date return at around 40%. That is significantly above the 31.7% inflation. No doubt, we have other securities in the market, like I mentioned earlier, they are still below inflation as we speak.
The central bank will have its monetary policy meeting next week after a month prior. That's the last one was last month. They're having it back to back so that they can fill in the lag that we had last year. Do you still see a hawkish stance by Cardoso and his team because the last MPR was raised to 22.75 from 18.75? With inflation at 31.7% now, with Cardoso and his team, I wonder what kind of arguments will go in the room, either for or against or hold. Do you see a hike since the central bank really has a hawkish stance? That's one. Then number two is the week of central banks. Of course, this week, a lot of central banks are meeting across the world. Is there a kind of even influence? Is there a way that these central bankers move like teenagers, as it were? Because we saw that, I think, during the pandemic, almost all the global central banks were hiking rates. But European Central Bank, ECB, and the US, and some other Asian central banks, now we're seeing them, slow down a bit. So they seem not to be moving like teenagers now, because it seems everybody's now grappling with their own peculiar and unique challenges. But does all of this even filter in any way into what our own central bank does? That's the monetary policy meeting. Then finally, what will you say to a Nigerian right now that is really struggling with an inflation rate of 31.7%? I mentioned you could go in the morning to buy something at 1,000 naira. You come back in the evening, is 1,500. Go tomorrow, is 2,000 naira. And they are justifying it for you that when they go to the market, they can't buy with that old price. So what will you say to the Nigerian that is watching us now?
Okay, so two key questions in that case. So I think we should start from what the central bank governor said at the last meeting. What he said is that they will watch the decision they've taken to see the impact on the economy, and if there is a need for further tightening of monetary policy, they will do so at the meeting of March. And so that is the reason that is one. The second thing for consideration is that inflation number came out, and it still shows that we are seeing an upward pressure in terms of general price levels. And you know that the key mandate of the central bank is to ensure price stability. So our expectation at Chapel Hill Denham is to see the Monetary Policy Committee raise interest rates further by about 100 to 200 basis points. I will consider a 100 basis point increase moderate, and I will consider a 200 basis point increase aggressive. I will not be surprised if it is up to 200 basis points, because even inflation in itself is now becoming more stubborn than we expect. The other question around what should Nigerians be doing? Honestly speaking, the current situation we are now has not left anyone untouched. The rich and the poor, everyone is feeling the impact. The impact is just uneven. But my sense is that Nigerians can begin to think around, a more careful spending, spending more on, needs, essential things, and not so much of, wants. Like I myself, that is the way I've been planning my spending since we began to see, this, much higher prices. And just like you said earlier, the increases we see in items in the market, those increases are justifiable because those that bought them to sell them are also buying them at significantly higher prices. And I'm not sure anyone is out there to do business and make losses. So the price increases we see is something that we have to endure in the current environment, and hoping that over the next 6 months, let's say, there will be stability.
Okay.
What Nigerians must plan for is to ensure they earn more income in the next couple of months.
Thank you. I think
because when your income rises, you should be stable.
Yes. When your income rises, your taste should not also rise with your income, because that normally also comes up.
So you have to be stable. You have to stabilize.
Yes, you need to curtail your income.
Your taste at that point.
Yes, curtail your taste. Thank you very much, Tajudeen, because what was also coming to my mind when you were speaking, those that engage in the commerce of wants now, for people that have wants, their trade will also be a bit depressed now because people are going for needs. But thank you very much for being on the show today. Always a pleasure to speak with you.
Thank you for having me on.
All right, I've been speaking with Tajudeen Ibrahim, who is the Director of Research and Strategy at Chapel Hill, Denham. We've been trying to look at, the sides of inflation and how it affects you and I. I'll see you all again tomorrow. God willing, be the best you can be and be the change that you want to see. I am Nancy Naji. Bye.